Hello everybody, and welcome to this economic impact video. Today is Monday, June 7th, and as usual, I'm joined by our chief economist, my colleague, Stéfane Marion. Hello, Stéfane.
Morning, Martin.
So we've talked a lot recently about employment, inflation. We decided to take a step back and really look at the economic backdrop globally to really see what's going on and shed light on some of the consequences of all of this. So Stéfane, let's start as usual with a very good picture globally for COVID cases and deaths.
Yeah, clearly on the pandemic front, things are improving rapidly. Martin, recall the last time that we made this capsule, this video, we had a pickup in new cases. So clearly what you can see on this slide is that we haven't seen a better backdrop on the pandemic front since almost this time last year. So clearly a significant improvement in just a few weeks.
And this is for developed countries, but it's pretty much the same for emerging countries, right? Now let's look at Canada, where vaccination is going extremely well.
Just a few weeks ago, Martin, some provinces were calling in the army to help them deal with the new wave of COVID cases. But since that time, the vaccination campaign has gathered strength, and now we are closing in. We've gone from worst to almost worse in the G7 to leaders of the G7, and we're closing in on Israel in terms of the share of the population has been vaccinated at least once. So that's good news, and it enables us to reopen the economy. So here's an easy forecast for you, Martin. I think there's going to be more people than 2,500 at the Bell Center in the coming weeks.
That would be for the Stanley Cup semifinals, right? So let's talk about the impact of all of this on economic growth globally.
Yeah, so vaccination campaign doing well. And it's really showing up as economies start to reopen globally. We have increased global momentum. You can see that the service sector is picking up, Martin. I mean, the service sector was pummeled during the pandemic, and it's showing renewed strength. And manufacturing is relatively strong. So we have all sectors now contributing to the global backdrop, which is very supportive for financial markets.
And we've also talked a lot about the stock market making new highs, but what's behind this is more interesting.
Yeah, so financial markets are doing well. The global stock market hit a new high in early June, Martin. And what's fascinating on this slide is that we can see the red line, the PE ratios are actually coming down. They're actually down 10% from their cyclical high back in May. So what that tells me, Martin, is that the uptrend in equity markets is not driven by speculative forces. It's driven by fundamentals, earnings, profits that are rebounding quite rapidly.
And PE shrinking means upside revisions to profit forecast, the best in 30 years.
Yeah, so in the past 3 months alone, global profits, the expectations have been revised up by more than 7 percentage points. You have to go back to 1992 to see a better sequence for earnings revisions. So clearly, people were very optimistic just a few months back. They weren't optimistic enough. And as we've said before, as economies reopen, there's scope for profits to actually maybe beat these expectations. So I think the fundamentals underpinning the uptrend in equity markets are relatively solid at this point in time.
And also something else that we discussed, the good Canada doing really well in all of this.
Yeah, so we mentioned at the start of the year, I recall we had these discussions before that if you think that the global recovery is well entrenched and the Canadian index, after lackluster performance in 2020, should do better in 2021. And you can see on the slide that quarter to date, and quarter's not over, we're already up 7% and 15% already in 2021. No one comes close to Canada in terms of equity performance or the performance of the S&P of the national benchmark year to date. So 15%, Martin. This is a stellar performance, which reflects again these relatively good fundamentals for the global economy.
And let's look at specifically profits for Canada.
Well, if you need to be convinced that we did well, Martin, we're doing well in this type of environment, here's a chart for you. Profits just surged beyond expectation in the first quarter, and this is national accounts profits. So it's not just companies that are listed on the S&P TSX. So profits at a new record high, almost 30% higher than their pre-COVID level. That bodes well for the domestic economy because, as you know, as you generate more profits, then the job market is likely to improve in the coming months as companies add to their headcounts.
And talk to us about what we discussed before, nominal versus nominal growth.
Yeah, so profits are benefiting from the fact that nominal GDP growth in Canada is very, very strong. So even though we're not the strongest in the G7 in the first quarter, maybe 5.5% real GDP growth, nominal GDP growth was at 18%. So I think this year Canada will be comfortably ahead of the G7 economies in terms of nominal GDP growth, which will be the strongest in 40 years. So, Martin, this is really important because if you have strong nominal GDP growth, you'll get good profits. And you know what? That also helps stabilize public finances because that stabilizes your debt to GDP ratio. So, phenomenal performance on nominal GDP. That bodes well for the domestic economy.
Phenomenal, but much needed. Now, let's look at the OECD, the consumer of the behavior of the consumer.
Okay, so I know we talked about the excess savings available globally. Last time we had this video, which is estimated at roughly 6% of global GDP. And I think consumers, as economies reopen, are deciding to spend some of this excess saving. And you can see that retail sales are very, very strong across the OECD economies in terms of volume. We're well above the trend that was in place prior to the pandemic. And it's so strong, Martin, that manufacturers cannot keep up with the higher demand. And there's a need to replenish inventories that are seriously depleted right now. So we've never seen inventories depleted as we're seeing nowadays. So again, that to me, what that means, Martin, is that industrial output will remain strong and commodity prices will remain elevated for the second half of the year.
Talking about commodity prices, 1 year ago, we had negative prices for crude oil. So where are we 1 year later?
Massive turnaround. In a span of just a few months, at this time last year, we were down to the lowest oil demand in over a decade, and it was the biggest drop on record. And yes, prices were not reacting well. A year later, Martin, I'm happy to say that demand has picked up quite strongly. We're not back to pre-COVID level. For that to happen, we need the economies to reopen. We need people to start traveling again. And I'm optimistic that this could happen before the end of the year. And what that means to me, Martin, is that demand now is exceeding supply. So for oil prices, it probably means higher is the way to go for the balance of the year. So we actually upgraded our WTI forecast from $65 to $75 for this year.
And the impact on the Canadian dollar?
Well, definitely there's an impact, Martin. It's going to be positive or negative depending on which side of, if you're an exporter or an importer. But we have revised our Canadian dollar forecast to show stronger loonie. So by another 2 cents, so we shaved 2 cents. So 117 is now our new target for the Canadian dollar. Listen, we're benefiting from the current backdrop.
85.5 for those of you who look at it this way. So that's a very positive outlook, Stéfane. The conclusion would be this is the economic background globally, which is really good. What's on your radar as potential negative scenario?
Well, if things are too good, inflation is going to be too high, and the central banks will be back in the picture and change their guidance. So I think that we need to be aware of this. For the time being, inflation expectations are still relatively well anchored, Martin. But listen, who knows how people will behave as the economies reopen. And as I said before, there's excess savings that could be deployed. So the inflation backdrop will be critical for the coming months.
Excellent. Thank you very much, Stéfane. Thank you for watching. We will be back in 1 month. Take care.